Hello, Trade Pros. Hello, hello, hello. Wow, what a great day. Today is going to be a great day, but it's Tuesday, October the 21st, and we have some great updates for you. I'm excited to share. Let me just adjust the camera one little bit for one last time. And I hope you guys are having a wonderful day, wonderful morning. It's going to be a great day in the markets, great day to be alive. Speaking of great things that have happened, the Toronto Blue Jays yesterday win the ALCS and go to the World Series for the first time in 32 years. It's crazy because the last time they were there was the time my family immigrated to Canada, and this is the first year that I've left Canada and they made it to the World Series. So it's all tied to my travel history for sure. I'm convinced. But yeah, congratulations to the Jays. You know, it's a team that I've watched many games at stadium. It's an open dome stadium that has a hotel built into it, the Rogers Place. I love it. It reminds me of Toronto. I miss it a little bit. Congratulations to Jays. We're going to get started in just 1 minute. I just want to make sure everything is green light from our amazing team. And we have a lot to do today. And also, pardon my scruffy appearance. You probably kind of hear it still in my voice. I'm slightly under the weather. Pardon me. This is, third day of the sickness. I'm getting over it. But I'm going to get started, okay? Here's the update. So markets are hesitating ahead of earnings. We have big earnings that have already come out this morning, but big ones after the bell as well. All right, Europe is mixed across the board. Not really much movement in the stock market there. U.S. futures are slightly red, but, consolidating gains. We'll talk about that in the trading plan shortly. All right, dollar index is up 0.2%. In the commodity space, gold is up 2% after hitting a new all-time high yesterday from 43.75 to 42.44. Copper is down 0.7%. And crude oil is flat around $61. Bitcoin down 3%. Ethereum down 3% as well. So the crypto space seeing a little bit of profit taking after a bit of a rally. In earnings and events today, we have a big lineup. We have Netflix after the closing bell, so it's not yet. Texas Instruments after the closing bell. Coca-Cola, Lockheed Martin already reported. We have 3M, Capital One, all right, RTX, General Motors, and these are big names reporting. We're starting out the earnings season in full steam now with a lot of companies before and after the bell, almost every single day. We got to get through 500 companies and more of earnings. All right, so key data that we're watching for, we got CPI out of Canada, ECB and the Fed speakers and then they enter a blackout period where they can't talk to Fed until their meeting coming up next week. All right, China's has some data as well. Not really relevant though. The biggest thing that I found, two big things here that I want to talk about today's morning market update are the impact of rare earths and a new deal with Australia and US. Also, I want to talk about Goldman Sachs order flow desk and what they've said about the market recently. And then we're going to go into our trading plan. It's a pretty busy morning market update. I'm not going to lie. When I was putting it together, I'm like, am I really going to be able to cram all of this into one update that's supposed to be 10 to 15 minutes? And we'll find out, right? We'll find out. I always over-deliver and under-promise. All right, so U.S. and Australia signed a major critical minerals pact to cut reliance on China. So this is a very interesting move. All right, each country will invest over $1 billion within 6 months with a total project pipeline near $8.5 billion. It's a lot of money. All right, one company doing really good is Arafura Rare Earths. I'll be honest with you, this is the first time I heard of this company. It's up 30%, but the ticker symbol is ARAFF. All right, so check that out. That's kind of benefiting. This deal is kind of part of a broader move for the United States to rebuild supply chains without as much reliance on China. And this is something that is very interesting. And the question we have to ask ourselves here is this virtue signaling? Are you saying, hey, I don't need you, China? That way that when I come and negotiate with you, you won't know that I need you. And I just showed you that I don't need you so I can negotiate better. Is it a negotiation hand, a strength? Or is this the reality of where the U.S. is trying to go, is to shift their supply chain? Or is it both? And that's what we're going to find out. But there are a lot of companies in the rare earth space, that's a tongue twister for me for some reason, that are benefiting from this. If you want to take some plays, just keep that in mind. The long-term we're going to have to see how the build out looks and the investment gets deployed to see if it's a long-term deal or there's just jawboning between the U.S. and Australia to kind of scare Russia into some compliance, or China to some compliance. I don't know where Russia came from. I do know where Russia came from. I play hockey a lot, and I play against a team of Russians, and they're living in my head rent-free because it really upset me last game. But that has nothing to do with all of Russia. I'm going to take out my anger on Russians because a couple of Russians. Or wait, should I? I'm kidding. Market impact, mining and mineral sectors obviously surged. Australian indices hit new records. Everybody is seeing this as a positive. It is part of the reason stocks rallied yesterday. Short term, it's bullish for miners and materials. Long term, let's see. Let's see how committed this money actually gets. Right now, it's just a statement. All right, that's one thing driving markets yesterday. I had to update you of. In the news front this morning, Lockheed Martin came out with earnings per share at $6.95 versus $6.36. They're a defense contractor, ticker symbol LMT. All right, revenue $18.6 billion over $18.54 expected. That's a beat across the board. LMT is plus 4% in pre-market trading and pushing higher, so that's good news. Coca-Cola came out with 82 cents per share versus 78 cents expected. All right, on revenue of $12.5 billion versus $12.39 billion expected. That's also a beat. There's growth across the board there in all of their sectors. Operating income up 59%. All right, their guidance is 5 to 6% growth, revenue growth for the fiscal year. And KO, that's the ticker symbol, rises 1.8% in pre-market. Okay, so really big and good earnings reports that have come out here in the news this morning. Okay, Goldman Sachs. Now we get to the Goldman Sachs order flow piece. Goldman Sachs has some really good order flow desk analysts. They're not like Kalanovich and the flow guru himself, right? But Goldman Sachs has good order flow analysts, and I read all their reports because their flow updates are really, really good. Okay, this is what they said. U.S. equities and passive vehicles, meaning passive investment vehicles, not active investment, 11.77 trillion in assets under management with 186 billion of inflows over the last 9 weeks. All right, the largest such period on record at Goldman's desk. So that's Goldman Sachs has seen the largest inflow of passive investment. So this isn't just retail, it's institutional clients as well joining the rally and being on board as we approach all-time highs again. All right, money markets 9 trillion with 992 billion inflows year to date. All right, hedge funds are speeding up de-risking, portfolio managers reducing both long and short bets. Hedge funds aren't always right. In fact, they're often wrong, and I'd love to be on the opposite side of them most of the time. All right, energy exposure in hedge funds is now at its lowest in 3 years, according to Goldman's prime brokerage data. So basically, all this says is Goldman Sachs flow desk confirms that there is money coming into the market. It's not just a rally on thin volume. This is an increased participation rally, which is a really good thing. I thought that interesting. I thought I'd share it with you. Now, those 4 bullet points were come up from a 25-page plus report. There's so much more insight to be gained from these reports that I can't share on a morning market update because it'll take forever. But put it this way, it's good. All right. The bottom note is it's great. Just keep watching for some upside and see what happens. Because remember, order flow data is kind of like a balance sheet. It's a snapshot. It was only as good as when they captured the data. It could have changed until now, but it's kind of the week-to-week changes of this data and information that's really important. And it's only centered around Goldman Sachs clients. They don't do flow for the entire industry. They couldn't because they don't have the client book outside of their own bank. All right. Let's get into trading for the day because there's going to be some cool things here. Options flow data for this morning. Call wall near 67.75 to 6,800, which funny enough is kind of where the overnight high was. We'll talk about that in a second. I just looked back to make sure we didn't break it. The next, which is a resistance, by the way, 67.75 to 6,800, a big resistance zone. A lot of call options written here, a lot of gamma. All right, and when there's a lot of gamma, it means when the open interest is high at this level, whoever wrote the option will have to buy or hedge back by shorting the futures. All right, on the put wall side, there's a put wall around 66.85. We're far from that, 6,700 to 6,725 is the bottom end of, or the higher range of that. So there's a lot of puts there that act as support. So all in all, the interpretation there is the market's pinned between 6,700 and 6,780, right? And within that band, expect some mean reversion and chop. Now, that's an 80-point band on S&P 500 futures. But, you know, this is where the title for today's report comes from. It's the gamma sandwich zone, basically a zone where you expect neutrality and mean reversion, or as I call it, the Gammwich. It sounds like a Harry Potter character when I say it out loud, but it's the Gammwich. The Gammwich is here in an 80-point range for you guys. All right, a break above 67.80 could trigger some short gamma squeeze, and it probably failed to do it overnight, but above that level, above the 85.90 in the U.S. session should cause that squeeze. If it doesn't, then we have our answer as to what may happen. All right, above 6,700 or below 6,700 just gets ugly, but we're far from that. All right, like we're gonna have a lot to trade before that happens. Here's Georgia's daily levels. Overnight high 67.85 in the ES. Remember, I trade the ES. But if you trade anything, you should know what the S&P 500 is doing, because the ES is the futures on the biggest 500 companies, the large caps in the U.S. market. It is basically, quote unquote, the stock market. When people talk about it, that's the reference that they use. All right. The Dow is popular. It's got some like swag and some clout and credibility, but it's only 30 stocks. All right. S&P 500 is 500, so it's a more broad market index. Okay, so overnight high 67.85, prior day high 67.83. So in the overnight session, we managed to get 2 stinking points higher and curl back down. Okay, the prior day close was 67.73 half. So to rally back up to the 85 is, 12 points in a bit is impressive. Overnight lows at 63, prior day lows at 33. So we've put 30 points additional above the overnight low in the above yesterday's U.S. session in the overnight session. So we're 33 points higher. And the prior day open was 33.5. So basically, this is the plan. Okay, this is how you take all this data and you make it into a usable plan. I'm going to read out for you. Okay, there's a couple notes here. Okay, price pushed 1 tick lower from the 67.33 half open yesterday, and it formed a low of 33.25. So we opened, we go 1 tick lower, and immediately bid with very shallow pullbacks. There's nothing that was really giving you an entry, and very strong buy order flow. And it just right off the open, it just got going. And the bid ran up to 67.85, which was a daily high, with very little chances to get in comfortably on the long side. And I said in the trading room, this is why it's going up so much, is because it's hard to get in. All right. And that kind of took a few people back, gave them a chance to kind of think about it a little bit. But it said it's going up a lot because it's not giving people a chance to get in, which means what does that mean? It's not giving you a chance to get in on a nice, cute pullback where your stop is going to make sense, where you're going to be comfortable with the risk. It's not doing that because it's making you pay more for it and lose your cool and go and market order into it. That's why it's bidding like that. Good luck trying to, put a limit 15 points below saying I'm going to get this pullback. Yeah, good luck. Good that you kept putting your 15-point limit higher and higher and higher on the day, and you never got the fill. Because you got greedy. You're waiting for this risk-free level that doesn't exist. So this is why I kept bidding. So, we kept climbing. We kept going up. People were abandoning their resolve and just buying this bid that just kept running up. All right, but since yesterday's rally, okay, and we were primed to get long. Yesterday, my thesis in the morning market update was, I'm going to start on the long side, but I was nervous. And honestly, I was nervous all day long trying to get long because it was hard to get a pullback. But since then, we only climbed 2 points in overnight Globex action. So the overnight session only took us 2 points higher from yesterday's high. So all that huffing and puffing, and overnight in the European session, not much follow through. All right. And the overnight low is just over 20 points lower with the PDCC in between. So we're rotating around the prior day cash close, which is a bullish indication that we're consolidating, we're accepting this level. Great, but it also feels really top heavy. All right, too many people are on board on this trade. The target today for the upside is 67.90 to 6800. All right, and if we could break above that, prior all-time highs around 68.12, and then we release a really big gamma squeeze to the upside, which will probably take us to like 68.50. and that's based on call option activity because there is no levels up there other than a Fibonacci extension, which I don't use. There's no other way to find out where we're going. So what I'm looking at is option activity to identify a level we haven't traded in yet. But those are the levels to the upside. But I tell you this, do this with ease. Do it like I'm kind of in the same boat as yesterday. I'm going to be long off the open. I'll be looking for it, but I'll be nervous to get long. What I would prefer to happen, obviously market doesn't give a SHIT what I prefer, but what I get the sense might happen is what I should say is we start with a bid today. All right, we rope in the longs because they expect the same thing as yesterday to happen today. All right, markets repeat, don't they? Well, no, they don't. Not the way you would think. All right, and then we run and sell the stops lower once we get everybody on board the long, flush them out, hit their stops, then the bid picks up and we make a run through all-time highs later in the afternoon. So think about this. There's a lot of fear of CPI on Friday. We haven't had inflation report in a long time. Data's been delayed due to the closure of the government. All right. And we have earnings after the bell, and we have more earnings next couple of days. So the mood is definitely turning slightly more neutral to even a little bit downbeat, I should say. So careful on carelessly holding longs near highs. I'll tell you that much. All right. Especially if you're day trading. So the day trade is this. You know what levels I'm looking for. You know I'm looking for the upside. But the moment I start to see that there's a lot of long paper piling into this long side trade and nobody's getting paid, I'm flipping short on order flow. And I'm going to have order flow to tell me that moment of when and exactly at the level of which to flip because I'm going to see everyone buying and price not going up. And I know you're stuck. And I know that when you're somebody who's long and when you've bought everything that you're planning to buy, I know that you're actually a seller despite the fact you have a long position. You have a long, and that's great for you, but for you to get out, you have to sell. All right? And me, as an order flow trader, I'm going to short it and push price lower to make you sell as low as possible so I can flush out that liquidity. All right? And as soon as you get stopped out, I'm going to be done on the short. So this is what we do at TRADEPRO Academy. This is our shtick. It's order flow trading. And it works with remarkable accuracy because you're looking at the book. You're seeing what is, not what you think it should be, but what it actually is. That's today's update. It's long. I got to get in the trading room. Victoria's probably already started. And, yeah, let's put this to action. I'm going to turn around, take a few quick questions. And so you don't look at the back of my head, I'm going to close down the camera. But thank you so much for tuning in. And I hope you enjoyed this update. Okay. OTM 8 memo. Good morning, sir. MS Dobef GMMG. What's going on? That's almost sounds like some gang slogan stuff. GMMG. My brother. All right, guys. You guys have a good day. You have a good day.